Well, happy Wednesday. Welcome to ATI Pro Media. We're powered by Advanced Trading, going live at 9 every day. So we've got the corn market bouncing nicely off the USDA report yesterday. The numbers weren't exactly bearish, but it wasn't what the trade was looking for. We definitely saw a bearish reaction. But right now, I'm looking over at March corn up 6.5, and we'll take it. Other news in the headlines, we got to talk about CPI. It is hot. We had Jay Powell had a few comments, nothing crazy, right? He's pretty good about staying neutral. And other than that, I think we need to look at how much can we see China imports on corn, right? What are we going to see for 2025? Great article from Reuters. I think we need to talk about. With that, Brady, quote us up on the market, and we'll go from
All
there.
right. Sounds good. March corn up 5 3/4 at 4.90. March beans down 4 1/4, 10.39. Soy oil is up 7 cents. Soy meal down $1.70. Looking over at Chicago wheat. March Chicago wheat up 5.5 at 5.82 3/4. March KC wheat up 5.5, 5.98 1/4, just below $6. Looking at the July KC wheat contract, 6.16 1/2, up 4.5 cents. Over in your cattle markets, March feeders down 600 points, 264.17. Looking over at live cattle, down 60 points on Feb fats, down 87.5 on April fats, 195.15 on April fats. Your hog market, Feb hogs up 52 points, April hogs up $1.15. In the energy markets, crude oil giving a little bit back, rolling over, down $1.13. Heating oil flat to down a penny right there. Nat gas is up 3 cents. In your equity markets, that's where some of the big action's happening. The Dow was down 400 points, the S&P down 47, and the NASDAQ down 142, Connor. Good to see corn rallying up, resilient, Connor. I believe that's
absolutely right. We saw, we were bearish on the we were down on the overnight, but yeah, good to see up 6.5. We were as low as 480, 481.5. Right now we're trading at 491. So good to see, right? We'll take it.
Yep, still below that $5 level though on the March. It'd be nice if we could break on through to the other side of that level, but so far, no bueno.
Not yet. Time will tell.
Yeah, but we had some good headlines here. What do we got first, Connor B?
First thing, the show. Flash sale. We don't know where it went to, but we had a flash sale. 130,000 corn to unknown, 120,000 soybeans to unknown as well. So good to see. We'll keep them coming, especially on the soybean front. We didn't talk about export inspections. When that was released Monday. We didn't. Yep. Yeah, we didn't talk about that Monday or Tuesday, but it's kind of the same story where soybeans, we see it dropping off, right? Which isn't it's typically what we see most years, right? When that South America crop comes online, they become the destination, and we're kind of following that path. But any type of soybean sales we see, I'll take them.
Yeah, all right, I like it. Let's bring it on. This is that time of year you need those trickle-in soybean sales until we get that Brazil crop online. Keep that business coming to the U.S. while we can. I like it.
Absolutely. Well, the big headline, right, is going to be CPI. As we saw, CPI rose 0.5% from December, the fastest pace since September 23, resulting in annual inflation of 3% for the 12 months that ended in January. So CPI is hot. Increased more than we expected in January. And I think it follows the same line as that the Fed's not going to be in any hurry to cut interest rates going forward, right? I did see Donald Trump tweeted, we need to get interest rates going down. It'd pair nicely with tariffs that are coming on. So Trump wants interest rates going down, but the Fed is very much saying we're not going to see, we're in absolutely no hurry. So here's some stats for you, Brady. Okay. CPI jumped 0.5% last month after gaining 0.4% in December. In the 12 months through January, CPI has increased 3% after advancing 2.9%. Economists polled by Reuters had the forecast gaining 0.3%, so a little bit higher than what we were expected. But inflation isn't going away yet, I guess, is the takeaway.
Yeah, that's a good takeaway there, I think. So the things I think about when I think about it is, 3% inflation still here. So if you're not getting a 3% raise year after year, you're taking one step back every year if you're not getting that 3% raise and bringing home 3% more money. And then another tidbit that I read into some of that inflation data or headline there is egg prices accounted for about 2/3 of the total monthly increase in grocery prices in that data. And I don't think that has slowed down any bit since, that's January data. I don't think it's going to change anytime soon. At least it doesn't look like.
No, 2/3. My gosh.
Interesting. Yep.
Along that same line as we had Jay Powell meeting, and his overall message is that we're in a pretty good place, right? We're in a good place with this economy. The Fed is in no hurry to make any further interest rates cuts, but stood ready to do so if inflation declines further on the job or if the job market weakens. That's a direct quote from Reuters. And so he was very much hit with every question under the sun, right? How tariffs, how's that going to affect? Is Musk looking at anything into the Fed? And so he very much remained neutral. He said it's not the Fed's job to discuss tariffs or talk about if tariffs should be put in place, right? Our job is to react to where the economy is. So he said we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. So, to me, I think the overall rhetoric, we're not in any hurry. I don't think we'll see any rate cuts anytime soon, right? Obviously things could change, but, I don't know if we see 1 to 2 with what I know right now, which isn't a whole lot, but in 2025, if we see 1 to 2 rate cuts, I think that's about all we could hope for. What do you think?
I think similar. I wish I would have went and see how the Fed Watch reacted here, how it's changed. We need to do that tomorrow. We'll bring the Fed Watch tool in tomorrow and look at how that has evolved. But definitely feels like higher for longer from Powell's comments. But we'll see. Things change, and it's going to be a lot of moving parts to this economy. Guys got to wonder if some of this inflation stuff, the stock market's rolling over, and the corn's catching a little bit. Is the inflation trade helping out our grain prices right now a little bit too?
Hey, the old adage is that we hate inflation as your average consumer, but as a in the ag space, it's not necessarily inflation's not necessarily a bad thing when we look at commodities. So I guess we can hope, right?
Right. Yeah. A lot of pieces at play there. Just one piece of the puzzle, but got to wonder if that's some of the sentiment behind the big, some of the fund positions out there too, where they want to park their money. Yeah.
Yep. Absolutely. So, moving right along is that a really nice article from Reuters is just looking at what can we expect with China corn imports going forward, right? What can we see in 2025? The short answer is who the heck knows, right? Looking, combining corn and wheat imports, as you can see, we are significantly off the great run we saw in 21, 22, and 23. So they China really ramped up their buying in 2020. We benefited greatly from that in 2020, 21, 22. 23, right? Brazil really got a good chunk of that business where it really fell off. But going forward here, let me read a few of these. So we saw the big ramp up, but the U.S. corn imports to China in 22-23 fell nearly 50% from the previous year. 23-24 shipments fell another 60%. And so you look at that chart and you think maybe, okay, the business is shifting to Brazil, not necessarily going in 24, right? Brazil started feeling China's pullback last year. 6% of its calendar year 24 corn exports went to China, down from a whopping 29% in 2023. So across the board, right, we're just not seeing China with those big corn and wheat imports that we saw from 2020 to 2023.
Yeah. Yeah, definitely need feels like we need some sort of phase 2 type deal with China. But guys got to wonder. I'm going to have a cough attack mid-thought here, Connor B. Let me get a drink of water. Then I'm going to tell you what I'm wondering.
Okay, I got a good stat for you though. So, one thing we got to look at is that China's corn and wheat harvests were both record large in 24 and 25. And so here's a crazy, if we applied this to any other country, this stocks to use number I'd throw out would be unbelievable, but it is China. So, stocks to use is set for 65% on corn and 86% on wheat. Could you imagine if we had those stocks to use rate levels in the United States? 65% on corn. And
That sounds
so
like the wheat stocks to use. The wheat usually has the 30-40% stocks to use ratios.
but those are 11-year lows for China in terms of corn stocks use, 9-year lows on wheat.
Wow.
So that's our hope, is that we could see, China is a trading partner. They're very good at what they do. And so that's, I guess that could be the hope, is that they're sitting on the sidelines, but hopefully we could see, some form of, they come in like a whirlwind, right? That we see that really ramp up. But the truth of the matter is it's hard to tell, right? But they very much, I'm gonna pull that chart up again and just show how, that great run, right? When we look at marketing years, I want comparisons to 21 and 22, where our supply was much lower and China was buying a ton. We're getting back to levels we've seen, kind of before there. So who knows where we go?
Yeah, that's the game changer event that could come in and change the game of this market right now. And will they come? Will they not come? But that's one of those big events there. Guys got to wonder, before I had my cough attack. Guys got to wonder about Ukraine and the Black Sea. I think a lot of imports from grain out of the Black Sea go into China and enter that market. So what is that? There were some headlines yesterday about some potential peace type deals with Ukraine Russia situation, and how does that change things with that whole conflict there too? But big piece of the puzzle, Connor. China's hugely important to pulling down our exportable and leading to our export business. Good stuff.
Yep. Absolutely. And just their absence, going back to this summer, we were talking about how China had almost nothing on the books from the United States, right? And the feeling, or at least for me, was that business went to Brazil, but that's not the case, right? They're just very much sitting on the sideline, and they're not really buying any corn from anyone. So yeah, we'll see where 25 shapes up, but it's going to be interesting.
Maybe we can get some sort of phase 2 deal with
China.
Sounds good to me. All right. Well, answer a few questions and get out of here. What do you think?
I think so. Yeah.
Let's do it. What we got? World grain stocks low, Chinese grain stocks high. If they are forced back to the phase 1 deal, what ag products would they buy? Did you mean for that to rhyme, Luke? Milk products, beef, pork, or chicken, cotton, and sorghum? What do you think?
Beyond me, Carnby. I got to read that question again. What's
World grain stocks low, Chinese grain stocks high. If they're forced back to the phase 1 deal, what ag products would they buy? It sounds like a riddle.
Yeah.
It sounds like
it does. Yeah. I would love to see, sorghum, pork, beef, and then of course beans and corn. But sorghum would be huge too. And cotton. Yeah, they buy a lot of cotton. It's a huge staple for it and would help those cotton prices out. But how about across the whole spectrum for ag products? Just make sure they're ag products and they're coming from the US. That's all I care about. A rising tide will often lift all boats. So if you're buying a lot of corn, sometimes that lifts the bean market as well too. So yeah.
Good stuff. Pull that up. Tony, some good carry shipping up and remaining corn and beans in our area. Board getting interesting on spreads as well. Taking note. Great comment, right? Looking at March to May, we got it at right at 13 cents. Go out to March, July, we've got that spread at what, 16, 17 cents?
Yeah. You got to pay attention to those spreads and the carry and what the market's giving you to store it. Make sure it's worth your time to hold on to those bushels out there, or do you need to move them up? So watch your local basis, watch those spreads, how they're moving, and what's the market telling you to do out there. I think that's worth paying attention to, especially on old crop. I like looking at spreads in new crop too, because a lot of times guys will go out there and you get a 10-cent bump from Dece to March, but is it really worth 10 cents this time of year to go sell the March, or should you manage that position? How do you manage that hedge position on those forward contracted sales going out there into the new crop grain? I think those are important things to have your head wrapped around.
Yep. Great comment. I know me. I always favor. I'm a keep it simple. I think if we're doing new crop hedges, we got to keep them in the new crop months. That's December and November, because then we have that flexibility, right? It's nothing saying, especially if we're sticking it in the bin, right? We can
Mm-hmm.
manage that futures hedge out and potentially pick up carry if we see a type of market where it goes inverted, or a really short crop where basis is just screaming higher this fall. Set basis and we can deliver it. So,
Yep. Yep. I like it. But when you're thinking about your targets out there and throwing them out there, factor in what month should I be in? Where should I be placing those targets, and how should I manage those positions? And what can I potentially set myself up for to manage them down the road too?
yep.
Good stuff.
Good stuff.
Connor, you did a premium yesterday. Let's talk about your premium you filmed. What'd you pump out yesterday?
So just looking at ARC versus PLC consideration, I think it's that time of year. So I dusted off. I used the same spreadsheet or same PowerPoint I used from last year, but just looking at it, right, when we look at ARC versus PLC, there are so many acronyms that are thrown out, right? It's like all these different numbers. So I just tried to make it simple, give you the facts to what makes sense for your operation. But I think the main takeaway is with ARC versus PLC, remember that is kind of I look at it as like a disaster relief, right?
Mm-hmm.
I make sure we're very clear. We do not want a payment on ARC or PLC because we are dealing with a significantly lower commodity price environment, or we're seeing a real pullback on yield, and then the price didn't really jump up. So, I guess if someone disagrees, let me know. But I feel like this year ARC makes a little more sense, right? We got to take PLC if you're looking at some type of supplemental coverage on your crop insurance. You got to take PLC. Simple as that. But it feels like ARC makes a little more sense, just if you asked across the board. But again, every operation is different. I just tried to give them the facts.
Okay, good stuff. Good relevant information to be talking about today, talking about now, and how it all ties in together with your overall marketing plan. So,
Yeah.
Good stuff. Good stuff, Connor B. Anything else before we get out of here? We wrapped up here.
Yeah. No, the only other thing is right now when I'm looking at new crop corn up 3 and November soybeans down 4 is we kind of continue, I think we need to check in on that corn soy ratio again, because it's not, it's not necessarily coming together, right? If anything, it's getting a little bit wider. So that's continues to be interesting as we start talking about acreage here in the US, or we're going to start talking about it very soon.
Mm-hmm.
Thank you, Joe. Rick. CONAB out tomorrow. That'll be a big one, right? We saw the USDA. We reduced second corn crop production in Brazil. We saw Argentine corn reduced slightly. We didn't touch soybean production, not at all. It's going to be interesting to see what CONAB comes out with, right? Can we get that gap tighter, right? CONAB versus USDA has been, uncharacteristically wide for almost a year or two. I think almost 2 years. And so, or is that just the new normal? I guess we'll know tomorrow.
It feels like the new normal to me, Connor B. I'm excited to see if it changes tomorrow too. But we got two different stories marching to beat of their own drum, and we'll see how it all comes together. But yeah, it doesn't look like there's a problem down there right now. So yeah, good stuff, Connor B. All right, we'll be back live at 9 again tomorrow. Anything else we need to run through here?
Nope. I think everyone have a good day, and we'll see everyone tomorrow.
Okay. All right. See you.